Hello and welcome back to the channel. Today we're going to be discussing AGI Greenpac, a company which is engaged in the production of various packaging products including glass containers, specialty glass, PET bottles and product, and security caps and closures. The company is the second largest glass container company in India and accounts for 20% market share of India's organized glass packaging industry. The brand is divided into three segments. AGI Greenpac, which is the company manufactures glass containers and specialty glass under this brand, and it caters to some of the biggest alcoholic brands and pharmaceutical companies, and also it is getting into cosmetics and any company, any industry where the use case of glass container is. AGI Plastic, the company manufactures PET bottles and products under this brand, and this is also quite a growing segment. Glass container segment is slotted to grow at a CAGR rate of close to 6 to 7%, and the company also has another segment which is called AGI Closures. Under this brand, the company manufactures counterfeit resistant security caps and closures with a primary focus on the alcohol and beverage industry. The revenue mix as at FY23 for the company was that the glass containers was 89% of the business and everything else was 11%. The glass containers revenue mix can be divided into alcoholic beverages at 75%, food and beverages at 19%, pharmaceutical at 6%. AGI Greenpac has a capacity of 1754 tons per day. The company has 500 plus diversified institutional clients across industries such as Abbott, Coca-Cola, Glenmark, Bacardi, Carlsberg, Nestle, HUL, you name it. And the company is there. The company ventured into the cosmetic and perfumery segment, which is one of the profitable market segments in the country. During FY22, AGI Greenpac sold its building products manufacturing business to Hinware Limited on a slump sale basis for a total consideration of 630 crore. The company will focus on increasing its exports to the USA, Australia, and a few European countries. AGI Greenpac is available at a PE of 18.1 with a market cap of 4,553 crores. The book value is sitting at 280. Hence, when we compare the price to the book value, the multiple is not that high and it looks quite reasonable at the moment. The dividend is at 0.71%, which is not bad for a consumer-led company and a company which is a proxy to some of the biggest consumer industries in India. The ROE currently stands at 14.7. That can leave a little bit to desired for, but 14.7% looks reasonable at the moment. When we look at the profit and loss statement, as at March 2024, the company did 2,421 crore worth of revenue with an operating profit margin percentage of 23%. The net profit that the company generated was 251, and it has a dividend payout ratio of close to 15%. In terms of some of the metrics that we see, the sales growth, the compounded sales growth in the last 3 years has been really good, and it has been growing at a 24% CAGR for the last 3 years. The profits have been growing at 42% CAGR for the last 3 years, and the stock price is growing at a humongous 50% for the last 3 years. The return to equity for the last 3 years has been in the 16% range, and currently as well is standing at 14%. Liquor segment is growing at a CAGR of 5 to 6% in FY 2022, and beer market is expected to grow at a CAGR of 6 to 7% between 2023 and 2028. The growth drivers really in alcoholic beverages segment is the rising disposable income leading to increased spending on alcoholic beverages, expanding beer market including craft beers, extraordinary growth in premium liquor segment. Within the pharmaceuticals, India's pharmaceutical market was valued at around $50 billion in 2023 and is expected to grow at a CAGR of 10.7% by 2030. India, with the backing of the government initiatives and expanding infrastructure, is working towards establishing itself as a global leader in drug manufacturing. The key growth drivers for AGI Greenpac is India's container glass market is expected to grow at 6 to 7% CAGR in the next 4-5 years. The rising consumption of spirits and beer is leading to a heightened demand for glass bottles. Higher usage of glass packaging in food and beverage industry. The cosmetic and perfume glass packaging market is expanding, driven by the premiumization trend within these three segments. One of the key risks that there is that the prices of glass are very cyclical in nature, which may lead to margin erosion if there is cyclicality towards the upward side. PET segment of the bottle, which caters to some of the fastest growing food and soft drink sector in India, is slotted to grow at a CAGR of 27.9% between 2022 and 27. Evolving consumer preferences rising income and growing rural opportunity are some of the key growth drivers for the food and soft drink industry. The growth in food and soft drink industry is correlated with the growth in AGI Greenpac. The rural slowdown has bottomed out, demand is expected to stabilize. Within the cosmetic and perfume segment, the Indian cosmetics market is expected to grow at a CAGR of 6.45% between 2024 to 2028 to reach US $38 billion by 2028. The fragrance market in India is expected to expand at an estimated CAGR of 15.23% between 2024 and 2027. Some of the growth drivers for the cosmetic and perfume segment are ease of product availability, various online and offline platforms. There is a growing preference among the younger generations for skincare and grooming products. Let me know what you think of that analysis, and please mention within the comments below what you want to add to the analysis and some of the things that I should look further. Also do mention some of the companies that I should track and should go into more detailed levels in my next analysis. Thank you.